Welcome back. Sizable miss for jobs this morning, coming in at 73,000 in July with sharp downward revisions. That might be the bigger story for May and June. President Trump lashing out at Fed Chair Jay Powell on Truth Social, of course, after the report, telling him to drop the rate. Joining us now exclusively is Atlanta Fed President Raphael Bostic, along with our own Steve Liesman. Good morning, Steve.
Good morning, Sarah. Let's get right to President Bostic. Good morning, President Bostic. Thanks for joining us. I'm going to start in the obvious place. Does what Sarah just said, the number this morning, along with those hefty revisions downward, change your view of the employment market, to change your view of the economy, and your view on the outlook for rates?
First of all, good morning, Steve. It's good to see you and Sarah. It's been a while. Here's what I would say. It's something that is definitely true. The numbers today were significant, and I agree with you that the revisions downward in the previous 2 months were perhaps the bigger story. Look, we've now seen with these revisions a real clear signal that employment markets are slowing down in a significant way. I would say off of pretty solid levels before. So the question that is in my mind is really, to what extent is this a one-time move down that will persist over time? Or is this something that we will see where the labor markets will return back to their basically waiting to see where things are? But going into this week, I thought that the risks to inflation were much greater than the risk to employment. Our inflation rate, our core PCE, was at 2.8. It was not moving toward 2%. All the context we were hearing were saying that price pressures were going up, and labor markets were quite steady. Unemployment was at 4.1%. Wages were solid, and employment growth was solid. The numbers today and the revisions in an important way suggest that maybe the economy and the labor market is weakening more broadly than certainly what we're seeing in the 6th District. But that does also suggest that the risks to the employment side of the mandate are maybe coming more into balance with those in inflation. And that's something that I'll really have to look at as I think about the appropriate path for policy.
Raphael, there's the old song, I wish that I knew what I knew now when I was both younger or older. Had you had this data going into the meeting, would you have changed your view and what you ended up doing and supporting?
You know, I don't think so. There is still a lot of strength underlying the labor market. We do see that wages are not collapsing. So wages are operating in a way that we typically see in a solid labor market. The unemployment rate, as many have noted, is still at 4.2%, which is below full employment measures in many metrics. And I still am not hearing from businesses that they're on the verge of letting go a lot of people. So in many regards, the labor market still looks good. Look, even over the 12-month period, the annual job creation rate is still over 100,000 jobs. So in many ways, this is about slowing down. And now the task we have is really to figure out to what extent is this slowdown likely to persist and get us into a more troublesome position. But we don't know that now, and that's something that I'll be working on over the next 2 months.
Raphael, I know it's only a couple hours and change past the number coming out. But we had you penciled in, and I'll underline penciled because you don't make a firm commitment to your forecast. Had you penciled in for just one cut this year? Are you still in that place?
Well, you know, I don't really change those things until I get much closer to the meeting. So for today, yes. I do think that with new information, it's appropriate to rethink everything. And that's what I'll be doing with my team. If it looks like the labor market is weakening in a sustained way, such that the risks on that side have increased to be greater than the risks on the inflation side, then I'd be open to increasing the number of cuts this year. Today, I don't see that right now. Inflation is still further from its target than employment is from its. But we will just have to watch and see how things evolve over the next several months.
But I think one of the questions, President Bostic, is whether you should look through a tariff-induced inflationary spark. And that's what the dissenters, Governor Waller and Governor Bowman, have said, is that, sure, if we see tariff-induced inflation, it's one-off, and we should look through it. It doesn't speak to, necessarily what's happening in terms of demand in the underlying economy where the Fed should react to. Do you disagree with that?
Well, I think that's the textbook story of what tariffs mean and do to an economy. I think the situation today is a bit different in a couple of ways. First, the way that the tariffs have been rolled out has been over an extended period of time, which is not what you see in textbooks. So what we have is tariffs being in the psychology of the consumer for a much more extended period than I think we would typically expect. A second thing, which I think is quite important, but I have not seen talked about very much, is that these tariffs are intended to change supply chains in pretty significant ways. So in that sense, tariffs are intended to create structural changes, and those structural changes should, I would expect, have implications for the dynamics for inflation and other things moving forward. So if these tariffs are successful, then I don't think it will be appropriate to just look through them. Other things will have happened, and we'll have to tease that out to make sure we understand the full implication of that as we make our policies.
So just to follow up on that, I've been thinking about this too, Raphael, which is, you mean potential growth could be lower, which means that you would not be quite so reactive to growth stepping down if you are ultimately ending up in less optimal supply chain configurations.
So these are the things that we'll have to work through, but that is definitely a possibility. And, what I want to do is make sure that we understand the full picture of what's happening. And the tariff policies, as you know, are quite complex. Country to country, we have different levels. Businesses are still trying to figure out what their optimal strategies will be in this new environment. And it's going to take 3, 6, maybe even 12 months for them to come up with pricing strategies and sourcing strategies that make sense.
Raphael, one more from me, one more from Sarah. The dissenters said this morning, they talked about this idea of looking at inflation or PCE ex tariffs. Is that a calculation that makes sense to you?
Well, I don't think that's what we're going to do in our building. We've talked about this, and I think what we've come to the conclusion of is, the world is very integrated, and all of these things fit together in a very complex way, and it's very difficult to tease out individual things. So we're not going to go that route, I don't think, but it is an interesting concept.
I just want to push back a little on your view about the labor market and how it's in good shape. I know we got today's numbers, but it really does change. The 3-month average now goes from, I think, 150,000 to 37,000. And even if you look at the consumer, we haven't really seen real spending growth lately. We saw a step down in the GDP number on the consumer. So, why not get ahead of all that?
Look, I think we are in a very difficult environment right now. And if this was just a one-dimensional issue, I think it would be more straightforward. In fact, that's where we've been for much of the last 3 years. Today, we have 2 dimensions that we have to consider, and it's the intersection of those that really drives what makes sense. Today's numbers do raise the salience of risks to the employment side, but we can't just act as if there aren't risks on the other side as well. And our task moving forward will be to try to figure out on net, how should we think about this? Another thing I would say is there's a lot of debate also about how restrictive our policy actually is today. And that's something that I think everyone is going to have to reflect on, because it may be the case that there is a lot of momentum that we are not constraining things as much as people think. I don't have a full view on this, but this is something that we're also going to look at to really understand how much we're contributing to the dynamics that are going on today.
Raphael, thank you for joining us and sitting in the post-jobs report hot seat. Next time, one of us will get on the Delta flight between Atlanta and New York, and I'll see you in Jackson Hole as well.
I'll see you in a couple of weeks, and we'd love to have you down here.